So I think that there are some good times ahead for the sector, but I mean it is pretty rough right now. There's no question about that.
Brett, how would you describe sentiment at those two events this month?
I mean I think the sentiment now is as close as it was to the latter part of 2015 that I've seen it, which at the time was really the bottom in the gold price, right? We saw gold in 2011, go up to 1900 and change. It came all the way down sub 1100 briefly towards the end of 2015. The sector was pretty dead at that point. And then since then we've had an advancement, but it's been more of a choppy exercise than anything else. It's gone up, it's gone down, it's gone up, it's gone down. Over time, we're at actually a great price right now. I mean, $1,800, $1,700 gold. Like I said, the major mining companies, their balance sheets are solid. They're making tons of money. They're raising their dividends. You would think that there would be a lot more excitement going on in the sector today at this price. I mean, it's really an amazing price for the sector, and over the long term, it can generate some great returns at $1,700, $1,800 gold. We really don't need anything higher than that. But that being said, from a sentiment perspective, it's pretty bad out there. I have to say it's one of the worst times I've personally seen it since we started the company back in 2016.
So what's driving that? Because, well, it's funny. I look at my portfolio right now, and it's a lot of red on the screen, right? I'm in a lot of positions that are down, and truthfully, I have. Okay, so what I was discussing right before I asked you about sentiment at Beaver Creek was I just got off a call with Ronnie Stofferly. He was also there, and he was leaving one of the halls connected with somebody who he described as a diehard gold bug that he's known for a while. And this diehard gold bug put him on the spot and said, Ronnie, if gold's not performing now, how can we still have conviction? I think the gold narrative is dead. It made me laugh because 2 days ago, I was chatting with a peer of mine in YouTube land. He runs a channel like I do, and commentary, interviews, personalities, all this stuff. And we share portfolio notes about once per quarter. And he was grilling me very, very similar. He's like, Jay, all the macro forces are supportive of the gold narrative, but gold's not responding. I think that story is dead. I think the narrative is over, which to me was like the most bullish thing I'd heard in months, right? And I was like, geez, this is perfect, right? When you have these insiders saying, okay, it's time to throw in the towel here, right? So, the gold price though, Brett, it's not, I wouldn't call it depressed at all. The equities haven't performed, but what's with the incredibly negative sentiment? Because the latter half of 2015, as you described it, I mean, I was running precious metals investment conferences. It was depressing. It was tough, but I wouldn't call it that today. What do you think?
Well, I think there's just been lots of distractions for the most part. I mean, you've got a general equities market that just kind of continues to go up every single year. You've got, real estate that has been going up every single year. You've got a lot of asset classes that have just not been going crazy, but just been kind of slowly going up. I think a lot of that is due to inflation, which gold is supposed to hedge against that. And I think gold really saw the inflation coming. And I think that's why it made kind of a move from 1,300 up to 2,000 initially. And then we've been consolidating. But what we've seen is that, we've really seen the very beginnings of what I think is a much longer term commodity cycle. Like it's so clear when you take a step back. You look at commodities across the board, you look at inflation creeping in. I mean, it's got everything that you need in regards to the commodity cycle. Now, at what point in time do certain commodities move and others don't? You never know that, right? It's something that these assets move kind of on their own sometimes, and they move in cycles. But the one thing that we do know is that the macro trend is that we are in a big, I believe, the beginning of a very strong commodity cycle. We're seeing it with all other commodities across the board. In fact, I believe gold and silver are the two worst performing commodities out of the sector. And that also probably has a lot to play into it. Just kind of the timing where gold made a move, really ahead of the rest of the commodity sector and has kind of been consolidating since then. But I mean, nothing has really changed on the macro side. I think that, in the world that we live in today with total investable assets and gold representing, I mean, it's probably less than 50 basis points now. I mean, it was 50 basis points. Usually it's about 2-3%. So even if it got up to just the low end of that, I mean, the amount of capital that would flow into the sector would be extremely impactful. I mean, I think the way that you have to really look at it is you have to look for these contrarian indicators in the contrarian approach. And I have seen a lot of the same kind of deep contrarian indicators, whether it's individuals or other things that I've seen that where even the most bullish people have turned bearish. And that's how markets work. When there's no one left to sell, then you've got the bottom, and just like a top when there's no one left to buy. When everyone's in the trade, that's typically the top of the trade. So I think that there are some good times ahead for the sector, but I mean it is pretty rough right now. There's no question about that.
Interesting. Yeah. Okay. I don't know if I agree that it's rough. I guess I just don't feel that. I don't feel the depression in the markets. I actually find it to be quite exciting, truthfully. And when I look at any asset right now, where could I allocate capital, right? What is undervalued? It's really hard to find anything, right? But precious metals is one. And I'm not a gold bug, Brett. Like, I get labeled a gold bug by friends of mine who don't own gold because it's just what happens, right? If you have 5% of your portfolio in gold to someone who doesn't own any, that makes you a gold bug. But I can't find much right now that isn't inflated in price outside of the precious metals and certain commodity derived equities.